I want to start with Humana. The stock is down 6% here in the pre-market, though it is up about 52% so far this year. So it came out with strong second quarter earnings, and Wall Street was hoping the insurer would raise its profit guidance. It did not, which is one of the reasons why the stock is down. Humana also said it spent more on medical expenses last quarter in its insurance segment than Wall Street anticipated. And Humana is one of the biggest sellers of Medicare Advantage plans, which also makes up the bulk of the company's revenue. And we know that there's been increased government scrutiny about this plan. It's made it more difficult for companies to profit in that business recently. So Humana says that the gap is growing there. There's a bigger gap in the segment between medical costs and revenues, and that it would have to cut benefits to maintain profitability.
Thank you so much for doing this. And Paul, this is the kind of stuff you'll learn in earnings season.
I know. Absolutely.
Business plans where, I mean, I'm still getting over IBM.
Yeah.
Oops, it's not working.
No, it's not.
That was a surprise. Yeah. I don't think this is as much of a surprise because a lot of the other insurers are going through the same thing. All right, let's move on to the consumer giant Procter & Gamble. You know it, Tide detergent, Crest toothpaste, Bounty paper towel, the list goes on and on. So the stock is down 3%, up about 4% though year to date. P&G reporting a lower fourth quarter profit and also forecasting full year sales and profit well below estimates. It's continuing to deal with a volatile environment, higher costs, some of the tariff stuff going on, but also Americans squeezed by inflation, trying to stretch their budgets. They're looking for value down the aisle in the supermarket. Organic sales, which we know is always an important metric here, that was flat. It did rise in P&G's beauty segment. You don't think beauty when you think P&G, but there you go. But it fell in its healthcare unit, also baby, feminine, and family care division.
Paul, help me here. It's like Nestle in Switzerland. Low single-digit revenue growth. 10-year total return, not even GDP, 10-year total return, 8.4% per year. It's priced right now back to where it was in the beginning of COVID, like middle COVID.
Yep, and you own this thing in large part, I think, for the dividend yield, which is 2.9%, which I think could be higher. They grow at about 5 or 6% every year, but you like to think that yield
did
could be
maintain
higher.
that. They didn't. They're not cutting.
But
They're leaving
like
the dividend
Nestle.
alone.
They've got to peel off. They've got to shrink. That's the only path.
Yeah.
Do they cut? Do they spin things off? I don't know.
That's what Nestle's doing. They do the water business in Paris.
Yeah, that's right.
Consumer products.
One more?
Let's go luxury. Kering. This is the company that owns Gucci and others, but Gucci is the flagship brand. So here's why they're celebrating, because sales fell, but less than expected. Okay, down 2%.
Well said.
So shares of Kering up about 5%. You know what? They were up 14% earlier. So I don't really know why we've come down so much, but still up 5%. And Gucci sales topping estimates, like I said. But this is after Hermes came out. They make the Birkin bags, you know.
Yes, I'm aware of those.
Yeah, they came out this morning disappointed. Stock is at its lowest level in 3 years because China, the demand is not there in China, especially for its leather goods. So Hermes hurting, Louis Vuitton, LVMH hurting as well. They were out with earnings. So sort of Kering is a little bit of an outlier here, and it shows that the turnaround efforts are starting to take hold at Gucci.
Gucci, I mean, the House of Gucci. Great book, by the way. Sarah
I saw
Gay
that
Forden,
movie.
which is a Bloomberg News reporter.
That's right.
Sarah Gay Forden. She wrote the book. It was an excellent movie too. So I mean,
it was a movie, not a documentary, but it was fun. I think it was a Netflix movie.
Yeah, and it was good. There you go. So Gucci, Kering.
Put it on your to-watch list.
Yep.
Okay.
It's just too much.
Yep.
There's a Gucci store in the middle of a square in Florence, Italy. It's very dangerous. It's like got a Citgo sign above it, like in Boston.
Been there.
You know, Americans, please enter.
Bring your dollar.
And they line up.